from $20,000 to $1.7 million in my crypto trading account in just over a year. Yes, I just did that. In today's video, I'm going to talk about the top 10 lessons that I learned that can help you better your trading career going forward. This is it. Let's get into it. Making millions of dollars as a day trader for 15 years and now mentoring students who are making $18,000 in a day, to making millions running an online course and coaching business and now mentoring students who are making $70,000 per month. I know how to make money online, but it's time to give back. So I'm going to give away over $10,000 worth of my online day trading and entrepreneur courses for absolutely free. All you have to do is hit that subscribe button, and I'll be running a small budget of advertisements retargeting people who subscribe to this channel. Subscribe now and be on the lookout for that secret advertisement that will give you access to all my programs for free. All right, guys, welcome back. You probably just watched that intro, so you know that I'm not just some guy up the street that started trading crypto and made a bunch of money. Yeah, a lot of people have made money in crypto in the last year or two, but that's all going to end soon as things get more saturated. It's going to become much more difficult to make money consistently in trading. And so today, this video, we're going to talk about, okay, what are all the mistakes mostly that I made while still making over $1 million? It should have been more like several to $5 million, but I fucked up big time along the way, even though I have 17 to 18 years experience trading in the stock market and then transferred all that knowledge into crypto. Obviously, I have a head start. You know, the saying like, I wish I could go back 15 years knowing what I know now, I would absolutely crush it. That's basically what I did in crypto. I had 17 years of experience day trading the stock market. And then I noticed that there was a lot of similar moves in crypto. So I just transferred all my knowledge into crypto and absolutely crushed it and had my best trading year ever. So we're going to talk about all of the big lessons that I learned in the last year. And if you haven't watched my last video, which basically me breaks down the exact timeline of depositing $20,000 in July of 2020 to today's current date, which is November 29th, the balance in my account is currently $1.648 million. Definitely watch the other video. I'll also link it below. But let's get into today's video about my top 10 lessons. First lesson, guys, is always use stops, especially when you're sleeping. As we have seen many, many times in crypto, we see these massive liquidation events, such as, you know, this one here, this one here, this one back here, where we have this massive sell-off days in crypto because a lot of people are using leverage or over leveraged. And all of a sudden, once all those stops start triggering, we see these massive liquidation events where Bitcoin and Ethereum drop, 5 to 15% in a day. And basically, if you're holding altcoins, which I assume most of you are, the amount of drop that happens in altcoins is usually 2 to 3x the amount of drop that happens in Bitcoin and Ethereum. And so for me, several times where I'm just not watching, that turns into, instant massive losses in my account. I believe the last one that I got caught in before, just an example of one position I was in Alice at about $18 buying the dip here, looking for a potential breakout on Alice to bounce off the support and just rip up. But what happened? No, Bitcoin and Ethereum had a massive doo-doo on my face. Nobody likes that. Doesn't feel good. Smells like shit. Tastes like shit. And you also lose a lot of money. Okay, so this massive drop from 18 down to $11 in just, while I was snoozing and I didn't have a stop in place, that's a negative 30% drop overnight. And I had multiple other positions that this also happened to me. So that instantly turns into a negative $50,000 to $100,000 loss day. That could have easily been avoided if I had a stop in place, but sometimes I'm an idiot. And I know a lot of you guys are trading without stop losses in place. Obviously, there are many situations where there are these massive sell-offs intraday, everything bounced up, and you might get stopped and you're like, fuck, everything bounced back up. And now I'm not in that position anymore, right? So it's kind of a double-edged sword. You have to decide, do I want to potentially lose a shitload of money or protect myself? Brief interruption from today's sponsor, Bynamon, of which they have 80,000 daily players of their runner game, and they're getting close to launching their first MOBA game, which is launching on the Unreal Engine. So the graphics are going to be insane. You know what MOBA games are? Like Vainglory, League of Legends, Dota 2. Those games are massive, and they're about to launch their own game. And to handle all that data, in addition to the BSC, they're launching their own blockchain called Tango, of which is the first proof of game blockchain, designed specifically to handle all the data needs of NFT games, and especially 3D games. Currently, they're in the top 3 for BSC News Battle of the Dapps, and also competing against D-Race and Yoshi for the #1 NFT game on BSC. Some of the top features that they're working on in their metaverse is a working scholarship program, working 3D runner game. They have 50 plus guilds, breeding, they're also introducing NFT lands and much, much more. Anyways, that's it for today's sponsor, Bynamon. If you want to learn more, go to bynamon.org and also check them out on Twitter at BynamonOK. I'm always a defensive trader. My focus is always survival. My focus is never winning. My focus is how do I minimize the amount that I can potentially lose? That's always been my focus. That's why I've been able to survive for almost 2 decades in trading, because if you know anything about the statistics about the success of day traders across the board, it's about a 98% failure rate. And most of that is because people focus on winning as opposed to capital preservation and survival. You lose sight of protecting yourself, and that's when you get yourself into trouble and sustain massive losses. And when you sustain massive losses, your head's fucked. You start revenge trading and making irrational decisions that lead to more losses. Okay. Lesson number 2 is only trade patterns that you know. And if you don't know any patterns, then that means you don't know anything about trading, and you probably shouldn't be trading, and you should consider finding a mentor. Just so happens, I have been a mentor in trading for almost 2 decades. There's gonna be a link below to my training program. It's going to be a free 1-hour video showing you more about the opportunity, about what I provide. Whether you want to go into that or not, you think, dude, look at this guy who sells courses. Yeah, I made over $1 million this year selling courses. If that makes you angry, I could care fucking less. But if you want to learn from someone who's doing a lot in trading and has been looking at charts like this for almost 20 years every fucking day and understands price action, maybe you want to listen to me. But if you don't, that's fine. But as a 20-year almost veteran, I also make mistakes, and such as me absolutely crushing it through this entire period. And rather than just locking in my gains and walking away, if you watched the last video, you saw me talk about what happened throughout this period. I basically trade what are called krypton patterns. There are 4 different patterns that form up, not all the time, but when they do form up, they produce massive fucking gains. Okay. And so if I only stick to those patterns, that's why I said my account would probably be more like $5 million right now. But I made a lot of mistakes, such as trading random just patterns. And I said, you know, I'm making content on YouTube, and I also have over 3,000 people in a paid Telegram group, and they're all relying on me for trade ideas. And so I was kind of, feeling pressured to come up with trade ideas for months at a time when there really wasn't any patterns. Okay. So if you don't see anything that's actually something that you're feeling comfortable with trading, there's no reason to trade. You might as well walk away and do absolutely nothing. You're much better off. Focus on survival, focus on capital preservation. As I said, this is another lesson that I learned time and time again, learned it again this year, because throughout this process, going through this dip area right here, as opposed to just waiting for krypton patterns, I was trying to do these random dip buys, shorting these tops. Market was all over the place. It led to me losing about $150,000 to $200,000 throughout this process right here. That was completely unnecessary. Only stick to patterns you know and wait until the environment of the market is set up for you, rather than trying to force an environment that isn't there. Lesson number 3, guys, is don't listen to anybody. Don't listen to me. What you need to do is gain enough knowledge in trading through practice and learning from other people. But when the market's live, when you're looking for trade ideas in the current market in a real-time setting, the only person you should ever listen to is yourself. I recommend basically unfollowing anybody you're following on Twitter who's giving you ideas. If you want to see what they're doing, watch what they do. Don't follow what they do. Don't listen to like, okay, they said to buy this, I'm going to go buy this. I have a Telegram group. There's over fucking 3,000 members in there. And a lot of them are looking to follow what I do, which is absolutely stupid. I say in the introduction, when you purchase my Telegram group, I say, don't fucking follow anything I do. Watch what I do, and then try to understand why I did it. The more and more opinions you start having from outside sources, whether you're following people on Twitter or in a bunch of different Telegram groups, and they're all telling you this story about everything's going to go to the moon and you're going to become rich, that clouds your judgment and you're not able to make a rational decision on your own. What you need to do is understand price action. You need to understand supply and demand, and you need to do your own research and come to your own conclusions. Because if you're relying on other people to make the decisions for you, you're not going to rely on just one person. You're probably going to rely on like 5 different people. They're all going to have different opinions. You're not going to know what the fuck's going on, and you're not going to be able to make a rational decision. And that's usually going to lead to you making stupid decisions and not thinking rationally and getting unnecessary losses. Lesson number 4, guys. If you're going to short the crypto market, for the last 7 years of my 17 years trading the stock market, it was all going short, all crushing people. When they thought things were going to the moon, I would slap them with the short and make a bunch of money. And I've done that many, many times also in the crypto market. There were several times when I made some completely stupid mistakes and lost $150,000 plus trading like a fucking idiot. And that was because I was using leverage and getting way too big on my crypto shorts. And I was also reading a bunch of bullshit on Twitter that was also relays back to the last lesson, which is don't listen to anybody. I also get my judgment clouded. As I said before, all these lessons that I'm talking about today are lessons that I learned, and not ones that I only learned today, but also needed a memory adjustment. Be like, okay, I know that I shouldn't have done that, but here we are again, me making stupid decisions and then relearning the same lessons that I already know. Brief interruption from our sponsor, Masterworks.io. With stocks trading at their highest valuation since the dot-com bubble of 2000 and inflation not looking too transitory, professional investors are either trying to find ways to significantly outperform the market or hedge against inflation. And by professional, I'm talking about guys like Larry Fink, CEO of BlackRock, the world's largest asset manager. And recently, he called this asset class, which nobody is talking about, the world's greatest store of wealth today. If you want to know what Larry's talking about, you need to check out Masterworks. They let you access an asset class that has outpaced the S&P 500 by 174% from 1995 to 2020, has seen almost triple the appreciation of real estate, gold, and 90% of cryptocurrencies during the same time. And according to Citibank, has the lowest correlation to the stock market of any major asset class and is shown to outperform during times of inflation. On top of that, this market has grown over 2,700% in the last 20 years with no signs of slowing down. The asset class is contemporary art, which the Wall Street Journal just called one of the hottest markets on earth. The upcoming auction season is poised to sell off at least $1.6 billion worth of art, including works that could sell for 15 times their asking prices. But you obviously don't have $1.6 billion, so maybe none of this applies to you. And that's what's amazing with Masterworks. You don't need tens of millions of dollars to invest in fine art. Let me show you how it works. I believe this painting by Besquit is going to appreciate nicely. So I've invested $500 in the painting, and I can either wait for it to be sold, or what's super cool is that if I want to access my money earlier, I can sell my shares through the secondary market to someone else. If you want to take advantage and invest in some fine art, there is a wait list, but you can skip that wait list and immediately start investing by using my link in description, and it also really supports the channel. So go check it out. Thanks to our sponsor today, Masterworks. Such as if you watched the last video of me losing $150,000 going short Bitcoin and also wasn't using stops and just got clobbered by a 4,000 point move on Bitcoin that happened in under 5 minutes, 4,000 points, which was an instant $50,000 loss, and then lost another $100,000 throughout this process right here. And that all happened because I was oversized in my trading. Typically for me, if I'm trading spot, my positions are about $100,000 per position, but I got short about $250,000 to $300,000 on leverage on Bitcoin right here without a stop in place. And then all of a sudden a 4,000 point spike happened within 5 minutes of me not checking my phone. And that was instant $50,000. And as soon as I was down $50,000, that led to me thinking irrationally, trying to go for a comeback trade. And then I started increasing my position size upwards of $1 million on Bitcoin short up here, and then got squeezed one last time for an instant negative $82,000 trade on Bitcoin. So that sucks, okay? And so basically kind of what my rule now is, whenever you're going short, say if you had a $10,000 portfolio and you're dividing that into 10% positions, that means you're gonna buy a position. Each one's gonna be worth $10,000. If you want to short something, reduce that size by half, and your maximum size for going short should only be $500. Okay. So especially in crypto, these short squeezes are fast, they're hard, and they can squeeze you out big time. So when it comes to shorting, definitely reduce your position size about half the size of what you would typically go long. Lesson number 5, guys, is that pesky little thing we call leverage. And I never suggest you over leverage. And yeah, we all fantasize about how much we're going to make if we do a fucking 50x leverage or 100x leverage. I can't believe they even provide that on these crypto brokers. And I never do that. Even if I do leverage, sometimes it's like 3 to 5x leverage, but sometimes I get a little bit heavier than I should because I see a perfect pattern and I'm like, you know what? I'm just going to go balls to the wall on this. I'll keep my stops pretty tight and I'm going to make some bank if this thing fucking rips, right? Because we all get caught in that fantasy of, okay, if we fucking 5x leverage or even more, 50x leverage, we can turn $1,000 into $50,000 quick, which is not a good idea. That fantasy rarely plays out. And typically, if your position size is much, much higher, it gives you less breathing room to play with your stop losses. The volatility can stop you out much quicker, and it's much harder to make a rational trade throughout volatility. And once there's high volatility and you have a leverage position, you might stop out of something that you normally wouldn't have stopped out of if you had a normal position size. So case in point, sand, this son of a bitch, okay? This happened to me twice on sand. First, it happened to me back here. I was in leveraged sand, maybe $200,000 position, getting in right here. Boom, thinking, okay, if we break out all-time highs, sand is going to pump. Nope. I got stopped out, or maybe it was right here. I think I got stopped out. I bought in this day right here, and then I got stopped out on this fucking candle. And as opposed to being like, okay, maybe it's going to pop off the 50-day moving average here, I can stomach this potential loss right here and maybe even buy the dip and add more. And then boom, this thing just fucking absolutely ripped, 66, almost to a double within a few days of me purchasing almost $200,000 worth. Okay, what happened? Did I make a shitload of money? Did I make $200,000? No, I lost like $10,000, $15,000 getting stopped out because I was in too big. I wasn't able to think clearly when the volatility came and I got stopped out. Oh, let's see what else happened again here. Okay, here we go, guys. I'm in right here thinking, okay, sand is looking fucking hot. Here we go. We're getting ready for another all-time high breakout. If we break out all-time highs, sand is going to fucking pump. I'm super bullish on the metaverse. I'm super bullish on gaming. This shit's going to rip. Okay, let's do another $200,000, $250,000 position, which is over 2x the amount of size that I typically take in a spot position, and I'm using futures for leverage. What happens next? Boom. This fucking day, instantly down, stop out for negative $24,000, as you can see here on 10/27. Which is the day right here, 10/27. God fucking damn it. What happened to sand right after that? Because I was over leveraged all the way up to 850 with a $200,000 position under 80 cents. So these are mistakes that I continually make. Obviously, sometimes these things play out for me. Majority of the time, I did get screwed over by these just random fucking days of volatility. Same here on last time, looking great. All of a sudden, boom, boom. What the fuck, sand? And then the same thing, looking great. Boom, boom. So annoying. I could have made a shitload of money on sand. I still made money on sand because I did get back in at about 99 cents and then rode this up to $3 per share. And I also made a shitload of money on mana because I was in mana at about 85 cents and then rode this all the way up, and I'm still long. I locked in multiple profit targets up here, but I'm still long sand or mana. I made about $250,000 on mana. So thankfully I caught mana, but sand, due to the fact that I was over leveraged on this position, I only bought about $45,000, $50,000 worth of mana down here. And made 250 grand off it. But with sand, I bought $200,000 down here and then got stopped out. So that could have been, $1 million trade on sand, but instead trying to go for that fantasy trade, even though I probably would have sold it at $1.50 and $2, I wouldn't have held through this whole entire position, but I would have made a lot of more money, and I probably would make more money consistently over the long run by decreasing my position sizes so I can think more rationally when I can trade and get less shaken out by the volatility. Don't over leverage. You're going to get screwed. Stop thinking in fantasy terms of the short-term gains and start looking at things long-term. Lesson number 7, guys, is always use multiple profit targets. And the reason being is because you never know how high something is going to go. And you never know if you buy into a trade. And I'm an active day trader, so most of my trades are very short-term. So many times I have an instant 10 to 15% gain on trades, which is an awesome trade. Equates to, $10 to $15,000 if I have a $100,000 position, which continually can grow my account big time if I lock in profits. But just as easily as 10 to 15% can come on a trade, it can also just get completely wiped out in the volatility. And then you never see anything after that for a long time. And it might drop down to another 30% from there before it ever would potentially go back up. And I'm not willing to potentially be at a loss of $30,000, right? I'll stop out for that. So what I do when I alert in my Telegram group, as we can see here, such as the latest trade on Hero, the alert idea was at 10.3 cents. And then I have profit targets so that 10%, 20-something percent, 30%, 50%, 70%, I'm always locking in profits along the way up. And I'm ensuring that I'm always making money in case the trade never works out. Okay, and if we look at Hero, this thing's just absolutely crushing, nailed all my profit targets, and I still have an open position here left of about $80,000, $90,000 because as I was locking in profits, I still have open position. So when you have multiple profit targets, it gives you the ability to always be locking in gains on the way up in case it doesn't turn into a massive gainer, because you can't swing for the home run on every trade, right? That's just not how trading works. It's never going to work like that. You're not going to fucking hit a home run every time you go up to bat. But if you can get a bunch of singles and doubles and then still have a small position or even half position left for if it does go for a home run, you're still making money on the home run swing as long as you hold some position. But ensure that you are making money always on every trade. If the trade does give you a 10 to 15% opportunity to lock in some gains, lock in 10 to 20% of your position and then set your stop. And then whatever remaining position you have, get more profits out, sell another 10%, sell another 10%. By then, maybe you still have 50% position left and it's still ripping, right? You can't get caught up in the fantasy of that you're going to make the perfect exit every time. Always lock in profits on the way up. Lesson number 8, guys, is always move your stop up as the trade goes up. On our alert on Hero, we got in at 10.3, okay? My stop was down here at about 9.1, okay? And now Hero is up. How high? It's up 90% from our alert. So I'm still up. And at this point, my stop's definitely not down here. I'm not going to give back my 90% gain on my position of what I still have left. So right now, my stop has been moved up to about the 9 to 13 EMA range in here because we could potentially come big dip back down here. I'm in this last position for a little bit longer term hold. As long as we stay above the 1320 and 9 EMAs, that's typically meaning we're still remaining in a bullish trend. So always move your stops up. Typically, after I lock in the first initial short-term gains, as long as it's above the 9, 13, and 20 EMA, the bulls are in control. And there's no reason to sell it unless we see a massive, massive spike. Obviously, there is a major gap. It could drop from the top down to my stop losses of 30%. I don't really necessarily want to see a 30% drop off the top from where it is. So I'm still always going to be locking in profits on the way up. And if I want to do a longer term position, as long as it's above the 9, 13, and 20, I can still hold it. But always continually move your stop price up in the trend so you're not giving back all your gains. Lesson number 8. I know every morning you guys wake up in bed and the first thing you do, just like me, is check your crypto portfolio to see if you either lost or made money on your current holdings. And also, just like me, I'm always looking for new trade opportunities. More and more I look, the more potential trade opportunities I might create in my brain that might not actually be there. Just like I said, throughout this whole period, I lost a bunch of money when I shouldn't have been trading. And I only trade Krypton or decrypton patterns. Decrypton patterns are what's going to be part of my new shorting course, which is going to drop in just to give you an example, illustrations of the shorting course that's coming up. Can't wait to get this out. Only short or long positions that are actually in a good trading environment and that you are familiar with. That would mean for me, probably 6 months or more out of the year, there are not good trading opportunities. The less you trade, the more money you're likely going to make if you have a system and a strategy that you follow. Maybe more than half the time, the system or strategy that you follow, the market goes in cycles. A lot of times, those strategies aren't going to be in play. If I was smart going forward, I would probably take about 6 months out of the year off. My lesson from this year, again, learning, trade less, you're going to make more money, take more time off. If the market's not in the right environment, walk the fuck away. Never force any trades. Lesson number 9, guys, is rather than looking at your account and it's on all-time highs and you're taking screenshots or you're showing everybody how much gains you got, guess what? You don't have shit for gains because you're probably not locking in any profits, okay? So when your account is on all-time highs, guess what's probably also all-time highs? The crypto market. And when things are all on all-time highs, like here, here, and here, things eat shit. And then you're freaking out. When you're on all-time highs, start locking in profits because then what? Then you have free capital to start buying the dip lower. So anytime your account's on all-time highs, rather than showing it off, start locking in gains. Show people how much gains you locked in. Be like, listen, I just locked in all these gains because I'm fucking smart. Now I have $100,000 free to buy the dip that we know is coming every fucking time. For some reason, these hodl cunt faces don't want to believe that 25% pullback is a thing. 18%, 26%, 50%, 25%, 22%. So to continually yell at somebody like people do at me all the time when I say, hey guys, probably going to see a 20-30% dip coming up soon. What the fuck are you talking about, Cam? There's no possible way. We will never do that ever again. 1, 2, 3, 4, 5, 6, 7 in the last year. And if you don't have any money to buy a dip when it's on lows, rather than thinking, oh, I'll buy the dip down here, you're thinking, I'm freaking out. I'm looking to sell down here. People start thinking about selling down here rather than up here. With your accounts on all-time highs, sell some profits, get ready to buy the dip. Lesson number 10, guys, is that I and you need to take advantage of crypto right now because I promise things are going to get much more difficult. Too many people are making money right now, and that's not how markets work. I hate seeing people make money. That means that you don't have to be smart to make money right now, which is a problem. Not necessarily everyone's making money, but too many people are making easy money. And in my experience in the stock market, starting in 2005, it was a lot easier back then because that was the beginning of retail trading for stocks. And things moved much cleaner. There was less competition. It was much easier to trade. And every year that went by, it got more and more difficult to make money because you had to have a bigger and bigger edge over everybody else. Right now, You don't need to have that much edge because crypto has just kept going up. And eventually, it's not going to keep going up. And eventually, it's going to be more and more choppy, less easy to find good opportunities. And so right now, you need to take advantage of this easy opportunity to make money. And if you want it to be even easier to make money, you can take my course, 997. Not a bad deal. If you want to learn more about that, there's a free 1-hour training that's going to teach you exactly everything that I offer and why you must understand how to day trade, because 98% of people in the markets fail. And yes, maybe there's a little bit more of that in crypto because people buy fucking anything, especially through these massive runs. You can buy almost anything you want and a lot of it's going to run, but that's going to end and it's going to end soon. So I would highly suggest watching my course, learning how I turned 20K into $1.7 million, which is actually about 1.648 now. It was 1.745 just a few days ago. So shaving money off the top. Cam, did you lock in profits? I did. And I started buying the dip like I was lesson 9. But anyways, guys, that's a wrap for today's video. Hit that like button, hit that subscribe button. Let me know in the comments what you thought. And hey, let's bump it up.
You got to pump it up, don't you know? Pump it up. You got to pump.
Peace.